We all think we understand how the global economy works, right? Well, think again. Today, we're unpacking a massive, complex web of global corporate ownership, and it is absolutely fascinating.
Just go look in your fridge right now. Or, hey, check your phone. You see all these streaming apps, the banks holding your money. You see endless brands, and you probably think you have endless choices. But the data forces us to ask a really uncomfortable question. Who actually owns them all? On the surface, sure, we see these massive corporations locked in fierce battles for your money. You've got Coca-Cola versus Pepsi, Apple versus Microsoft, Exxon versus Chevron. It looks like this thriving, highly competitive free marketplace, doesn't it? But peel back the layers of public stock listings, look past the big-name CEOs and the flashy boards of directors, and the source material points to the exact same two institutional giants sitting right at the very top, BlackRock and Vanguard.
Together, these two manage over $17 trillion in assets. Just let that number sink in for a second. $17 trillion. To put that into perspective, that is literally more than the GDP of Germany, Japan, the UK, and France combined. They aren't just your average shareholders. They're basically acting as the ultimate managers of the entire global economy.
Okay, so how is this even possible? Well, the source outlines this hidden structural mechanism called the passive loop. Analysts argue it's essentially a loophole that allows for total global market control, and it somehow manages to fly completely under the radar of traditional antitrust laws.
Which brings us to part one, competition theater.
Let's look at the biggest tech war on Earth. The data shows that Vanguard is the #1 largest shareholder in Apple, right? With BlackRock sitting at #2. Now, look over at Microsoft. Vanguard is #1, BlackRock is #2. It's wild. And it's the exact same story in the airline industry. You've got Delta, United, and American Airlines. These are fierce rivals on the surface. Yet Vanguard and BlackRock hold major voting blocks in all three of them. I mean, you really have to ask yourself, how fiercely do these companies actually compete when the exact same people own both sides? Economists actually have a term for this. They call it common ownership. The whole argument here is that when a tiny group of people holds the majority of shares across all the competing firms in an industry, well, the free market doesn't really operate the way our old textbooks describe. It becomes more like competition theater. So let's look at part 2, the passive loophole. Decades ago, Vanguard pioneered something called the index fund. It's built on passive investing. Here's how it works. Everyday investors put their money in. Think of your automatic 401k contributions, and that cash naturally flows straight to Vanguard or BlackRock. Then, they use your money to buy shares in all the top 500 corporations. And because it's labeled passive, it has historically faced way less regulatory friction. But here is the absolute craziest part. The real catch. The actual money belongs to you, the everyday citizen. But the corporate voting rights, those belong entirely to BlackRock and Vanguard. Because they control the votes, they get to dictate major corporate policies without ever spending a single dollar of their own money. We are talking about having the power to fire CEOs, shift massive global supply chains, or adjust wages across entire industries. They are the ones casting the deciding votes. All right, let's take it a step further. Part 3, the Aladdin monopoly. Because guys, it goes way deeper than just voting shares. BlackRock utilizes this insanely powerful proprietary artificial intelligence system known as Aladdin. And this isn't just some fancy spreadsheet. It effectively acts as the central nervous system for global finance. This AI is actively monitoring over $21 trillion in assets. Every single second of the day, it's calculating political risks, tracking corporate vulnerabilities, and predicting market outcomes with just unprecedented efficiency. And almost every major financial institution across the globe relies on Aladdin to tell them what to do. Major banks, insurance companies, even rival investment firms, they are all plugged into this exact same artificial intelligence matrix. Analysts argue that this creates a completely closed-loop monopoly. Think about it. One entity controls the investment pool, holds the majority votes, and provides the AI that directs the rest of the market. They don't just participate in the financial world, they literally built the infrastructure. And because of this, the sources point out they are totally insulated from economic disasters. If the market goes up, they win. If it crashes, their passive funds automatically rebalance, allowing them to scoop up distressed assets for pennies. It is a machine perfectly optimized for accumulation.
Which brings us to our conclusion, the era of corporate feudalism.
The core argument concludes that the old reality, those fundamental laws of supply and demand we all learned in school, are quite literally being replaced. The new reality is driven by the algorithms of these massive asset managers. The invisible hand of the free market is now heavily guided by visible institutional code.
We are witnessing the total financialization of the planet. You aren't just buying from a standalone brand anymore. You are participating in a highly centralized system, and every single dollar you spend feeds right back into this incredibly tight, interconnected network. Leaving us with one final striking question to ponder after this explainer. The next time you buy a product, watch a movie, or deposit a paycheck, who are you really paying? Thanks so much for joining me on this deep dive. Keep questioning the world around you, and I'll catch you in the next explainer.